Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, there has been a substantial recovery from the lows on the Nifty, 70 points higher, and that's, of course, courtesy Bank Nifty. So big moves being seen there. Midcaps, though, continue to be under pressure.
Midcaps continue to be under pressure, and for a change, whole of last week before that, we actually saw the broader end of the markets outperforming the benchmark indices. Today, it's actually falling, and in fact, the small cap index too has fallen quite a bit. But let's start off with the top headlines. Frontline stocks gain after an early dip, even though the broader market sees some weakness after a dip in US equities on Friday. Oil and gas, along with PSU banks, drag, while FMCG and private banks eke out gains.
Senco Gold surges nearly 3% after incorporating a subsidiary, Sense Fashion for new business. Management tells CNBC-TV18 they will invest 50 to 60 crore rupees in non-jewelry business initially, and this vertical will form around 4 to 5% of the total revenues.
SpiceJet gains nearly 3% as it issues shares to Carlyle Aviation to convert dues into equity. The deal is part of a settlement plan and brings down the company's dues to Carlyle to $97.5 million from $138 million earlier.
Deep Industries hits a 52-week high, rallies nearly 19% after it wins an order worth 1,400 crore rupees from ONGC. The order value is almost half of the company's market capitalization.
Welcome to Midcap Radar. In line with the global cues, we actually opened quite low, but there has been a significant recovery as far as the benchmark indices are concerned. It's the broader end of the markets, that's the mid-cap as well as the small-cap segment, that are seeing a bit of a sell-off in today's trading session. One pocket of the market that we can highlight right now is actually the life insurance space. Just 20 minutes ago, you saw the data flash on your screens, and amongst all of the companies that have reported data, the one that stands out quite significantly is actually Max Financial Services with its life insurance arm, that is Max Life. It's seen a growth of almost 17% off an already stronger base. So Max Financial trending the green, hasn't reacted too much, but the data there is something that stands out. But this is our special segment, Midcap Movers. Hormaz is standing at the wall to take us to the midcaps that are moving around in this session.
Significant pain seen in the broader markets. You'd call that significant considering the benchmark indices are trading in the green. We'll start off with the losers then within the broader markets for a change today. And Sona BLW, after a run-up that we have seen in the stock, is seeing some bit of a sell-off today at the lowest point of the day, 4% lower, as is Petronet LNG after that Jeffries note on the stock as well. Piramal Pharma at the lowest point of the day as well, as is Raymond and Birlasoft, all of them seeing losses of anywhere between 3.5% to 4.5% in today's session. A pocket that has seen selling pressure through last week continues to do so today as well is the PSUs, and it is within the PSU basket that you're seeing stocks like REC and PFC, the high flyers of last year and for a better part of this year as well, seeing a bit of selling pressure today, almost 5% down for PFC. Bharat Dynamics too within the defense space, and IREDA at the lowest point of the day, almost 3% lower in today's session. Some movers on the other side as well. These stocks are the metal stocks, and they are the ones that are also continuing to face selling pressure in line with what happened last week. Nalco, Hindustan Copper, NMDC, SAIL, almost every constituent of the metal index trading with losses in today's session. And lastly, some stocks that are bucking the trend. You mentioned Deep Industries earlier, but besides that, there is Jubilant Pharmova, most of them within the pharma space that are bucking the trend in today's session. Jubilant Pharmova at the highest point of the day, 8% higher, followed by Alembic Pharma. Gujarat Fluoro continues to build on its gains, almost 3.5% higher today, and DOMS Industries having a good day in an otherwise weak market. Back to you guys.
All right. Okay, Hormaz, thank you so much for joining us. So that is all the mid-cap movers that we have on our radar today. It's a good time to go ahead and connect with the management of SIS now. Q1 was a tepid quarter for them with muted revenue growth and margins under pressure. To discuss how Q2 is shaping up and what's the growth outlook, we are now joined by Dheeraj Singh, the CEO at SIS, joining for a few questions. Mr. Singh, good afternoon. Thank you so much for joining in. Can you give us a sense of how Q2 has shaped up so far? Are you continuing to see that mid-single digit growth? And when do you accelerate back to that double-digit mark that you've seen earlier?
Good afternoon. So SIS, we've always grown at a compounded rate of about 15% over a mid to long-term horizon. And we expect that similar growth to continue. We've seen a robust rebound in both our facility management and security business. In the Q1, We've seen that growth happening, and we see the same trend continue for the Q2. We are working on the improvement of margins. The security margins has largely been improved from last year onward itself. We've seen a growth from 3.9% to almost 5.5% in security vertical. And in facility management, we are seeing quarter by quarter an improvement in EBITDA margin of about almost 250 basis points. Sorry, 25
Mr.
basis.
Singh, Mr. Singh, thanks for outlining that and thanks for joining us. The important question here is you've actually given a guidance as far as maintaining a 6% EBITDA margin is concerned as far as the domestic business is there. Now, talking about the international business, Q1, you did see, the pace of growth slow down substantially over there. And also, you've given a margin guidance in the range of 4 to 4.5%, which is, lower compared to what you're giving for the domestic business. Q2 onwards, do you see international business revive, and what will be the long-term margin target over there? And especially, could you give us a sense of how Australian operations have rebounded?
So historically, if you look, our international business has largely operated between 4.5 to 5% EBITDA margin. And we expect similar margin profile to continue for international. However, for the next quarter, next 1 or 2 quarters, we will have pressure under one particular vertical in the international business, SXP, as we mentioned in the Q1. But by Q4, we expect the international business to normalize at about that 4.5%.
Mr. Singh, talking about the international business itself, in July, Fair Work Australia announced a minimum wage hike of 3.8%. That is with effect from 1st of July. Have you seen that happening in the contracts? How does it exactly work and how does it impact your business there?
So the contracts are for a longer term period and it has a lagged impact. So it is usually the impact for us on our books is after 1 quarter. So we will have the cost impact in the initial quarter and the revenue impact in the following quarter.
And how much would that impact be for you?
Sorry?
How much would that impact be if there is a 3.8% hike by Fair Work Australia? How much would that impact the company if you're saying the impact will come in the coming quarter?
So most of our contracts are on a cost plus basis, cost plus a margin basis. So when the costs go up, then our margin will proportionately increase by that amount.
Okay. Mr. Singh, talking about the facility management business, we understand that right now, you're in the midst of undergoing a review as far as the entire operations over there. We understand you've also weeded out a few businesses where, margins were slightly unviable. Give us a sense as we stand at Q2, how exactly has this particular business panned out? FY25, what is it that you're expecting from the facility management business, especially in terms of margins?
So just to recap on the facility management business, we are India's largest facility management business as of now. Right? Our quarterly run rate is about 550 crores. So that makes us almost 2,300 crores annualized basis. The difference is that our facility management is core facility management services. We haven't added other ancillary businesses to the facility management, which we can add in the future. We wanted to focus on the fundamental core pillars of facility management, and the margins that we are having currently in this core facility management business is still better than many of the industry peers if you compare apple to apple. However, we are nowhere near satisfied with our current EBITDA margin, and therefore our focus is to improve on the existing contracts profitability, focus on the kind of contracts that we are taking, new contracts, also work on the SG&A and other synergies that we have across our 4 facility management entities. We expect from Q4 our margins to come back to the 5.5%, and which will continue to build upon for further improvement in the years to come.
Okay. Mr. Singh, I was looking at the growth rates for this quarter. India Security Solution is up 7.8, International is up 2.7, Facility Management is up 2.2, Cash Logistics is the one where you've seen a 12% growth. It's right now, of course, the smaller part of your business. But going forward, which would be the business that would see the highest growth in your bigger chunk of businesses as well? And what kind of growth are you expecting in just Cash Logistics?
So as you mentioned, cash is definitely one of our rising stars as of now. And not just the growth, it is the EBITDA that is very exciting out there. As you're showing on the screen, it is 17% EBITDA. So it is more than 100 crores EBITDA annualized basis as of now. The good part is that we are focusing on more value-added services in our cash logistics business. So the percentage of revenue that comes from more value-added services is about 8%, what we call banking outsourcing solutions. So it's a proxy play for the banking sector. Any outsourcing requirement that the bank has, we are there to provide that. And
Mr. Singh, if I could interrupt you, we understand, you've also appointed a banker to go ahead and see if there could be a demerger and maybe a subsequent listing of this particular business. Where do you stand on that currently?
Yes, our board has approved for exploring the unlocking of value in this particular joint venture. And as you rightly said, we have bankers who are exploring this. And within a year, we hope to see the tangible output of this.
Okay, all right. So within a year, there could be some decision on the cash logistics business from SIS. Mr. Singh, a pleasure speaking with you. Thank you so much for joining in and giving us all those details. So that's the word coming in from SIS. Q1 was tepid, but they expect some improvement coming by due to improving fundamentals across businesses as well. Let's submit to a break now. Up next, we'll get you excerpts from the conversation we had with Bikram Yadav, RBL Bank, on their growth outlook. So stay tuned for that.
Welcome back to Midcap Radar. As promised, RBL Bank says it intends to grow its credit card portfolio at a modest 12 to 15% range compared to the industry's 25 to 30% growth rate in the segment. Bikram Yadav, business head of credit cards at RBL Bank, spoke with my colleague Ritu Singh on their business momentum and growth outlook. Listen in to the excerpts of that conversation.
As we have been stating that for last 18 months or so, we have been working on a diversified distribution channel for our growth ahead. So within which we have decided that first thing that we have done is that we have built up our own sales network in our branches and on our direct sales forces. We have also done multiple co-brand partnerships so that we do not have concentration risk in our sourcing of cards.
Okay.
Now, we are a fairly large issuer with about 5.2 million customers. We have seen a product stack in which we have multiple co-brands and multiple offerings in bank branded cards also. There was a gap on a fuel co-brand.
Okay.
And fuel is a rising consumption category with disposable income and affordability increasing and people consuming fuel at an increasing rate every year. So we were looking for a fuel co-brand partnership. We spoke to Indian Oil. They're the largest fuel retailers in India. And then we signed up this deal where we'll bring significant value to our customers and loyalty for Indian Oil and a large access to us through their distribution.
So with all of this expansion, what is the share of your largest co-branded partner come down to?
So, see, progressively what we are looking at is that we should not have heavy dependency on only one co-brand partner.
So now it is at?
So now we would be, we are already moving about 50-50.
Okay.
And in a progressive manner, we would taper it down further.
Should we assume the partnership continues till 2025 as originally signed?
As I'm saying that, this is one thing which we will not comment because it is in regulatory ambit and it's a discussion between co-brand partner and the regulator. So it's not for us to comment on it.
RBL Bank has come up in the credit card space fairly quickly now at nearly 5-6% market share in just a 10-year period. What are your aspirations here? The book has already grown to a third of your total retail business. At what pace do you expect this to grow?
So we indeed started our credit card business in 2014-15 and through our differentiated strategy we made space in this category. We are about 5% of market share. We would continue to grow in a moderate basis. So for credit card infrastructure to work efficiently, you need a minimum scale. That scale we have already reached. Now we would do more with our customers. So our focus would more be on doing more banking products with them, driving engagement, driving unitary economics, doing more with our customers in terms of other loan products like home loan, car loans. doing deposit relationships with them. So it is going deeper in the base rather than expanding the base rapidly. We would moderately continue to grow in range of 12 to 15%, and industry is growing at about 25-30%.
All right, that's the word coming in from the management of RBL Bank. With that, let's move on to an important story. Two Mauritius FPIs named in Hindenburg's Adani report have moved to Securities Appellate Tribunal, challenging SEBI's new foreign investor norms. Money Control's Pawan Burugula is joining us with more details on this one. Pawan, over to you. Hi, Pawan, can you hear me?
Yes, I can hear you.
Yes, please tell us.
So what we have gathered is that both these cases will tentatively come up for hearing at SAT tomorrow or day after. And it needs to be seen how SAT interprets these FPI concentration norms and whether it will force SEBI to, take a call on the exemption applications filed both these FPIs. Again, if SEBI rejects their exemption applications, then what we are gathering is that funds can come back to SAT So basically, the argument is that they are subject to additional standards of disclosure compared to other FPIs. And both these funds believe that they are eligible for exemption from the concentration norms. However, SEBI has not processed the application. We have also gathered that there are other FPIs also who are seeking similar exemptions from SEBI, and their exemptions are pending.
Okay, all right. Looks like there is some glitch, but we'll try connecting with Pawan again and we'll get you more information. But the gist is that more FPIs are coming up and requesting some waiver in terms of the new rules that have come by. Of course, we'll get in Pawan again to get you more details on this important story. For now, we'll slip into a short break. On the other side, we'll put focus on Senco Gold. This is a special offering, Midcap Spotlight. Welcome back. Well, markets have come up from the highs, but one stock which is doing well in the broader markets is Senco Gold. Mangnam is joining us now. This is our special segment, Midcap Spotlight. Mangnam, why is the stock buzzing in trade today?
Well, it's because of a development that the company has announced and informed to the exchanges. The fact that they've incorporated a new subsidiary for businesses. It's called Sensex Fashion, and this will explore the businesses beyond jewelry. So they'll have lifestyle products. They'll also sell lab-grown diamond jewelry, something that has been gaining a lot of traction lately. Alongside that, they'll sell leather and non-leather accessories and perfumes, etc. We spoke with the management this morning, and what was interesting is that they said that they will invest around 50 to 60 crore in this business initially, and thereafter annually it will be about 25 to 30 crore of investment itself. They will be selling and marketing these products themselves, making them also in their own brand. So brand building will be something that they will be eyeing. Going forward, it will be about 1 to 2% of their sales, and in the medium to long term, close to around 4 to 5% of their overall revenue will come in from the jewelry, non-jewelry business itself. Will it be margin accretive? Well, yes. At a steady state, it could be margins of close to around 30 to 35% on a gross basis. And additionally, on the jewelry business itself, they said that there was a strong pickup. In fact, September has been strong for both the company as well as the industry. From the start of this year to now, they've done 15% sales growth. Remember, sales growth in first quarter FY25 was just about 7.5%. So that indicates a stellar pickup, and that's also actually rubbing off on all the other jewelry companies as well. So Senco is doing well, but names like PC Jewelers, TBZ and others are doing even better. So keep an eye out in the jewelry space.
Thank you so much for that, Manglam. In fact, if we could pull up the intraday chart of TBZ, that stock today is doing very well. Tribhuvandas BMG, that stock too is up almost 13% in the session today. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.